how does the bond market employ or use the dot plot when it's not clear who's going to be giving forecasts?
Yeah, I mean, quite frankly, the bond market's been ignoring the dot plot and not pricing in for nearly as many hikes as we've seen. I mean, you've shown the chart of dots from the terminal all throughout the day, and that hasn't changed very much. We're now pricing for better than 50% chance of a hike in December, but beyond that, you're only talking about maybe another hike in 2018, but you're not talking about 4 hikes in the next 15 months.
The only good thing about this show, folks, is I get to peek over at Ira Jersey's brilliant charts on real yield right now. Carl Riccadonna, to the point of real yield, Dominic Constant at Deutsche Bank talks about maybe we get real GDP, even if we get less inflation with it. Relatively optimistic about a slow real GDP build out, even if we don't get the inflation overlay. Is that feasible?
I think that's feasible if we're at a stage in the cycle where, as the Fed highlights in their forecast, that they are significantly undershooting the neutral level of unemployment. That will create more wage pressures and recirculate back into stronger consumer spending and possibly stronger housing creation as well. Back to the notion of the communications difficulty during the press conference, this is the problem with starting the balance sheet unwind without a significant interest rate buffer. Back when we were initially toying with the idea of the unwind, there was a notion that the Fed would let rates get higher before starting the unwind of the balance sheet. Now we only basically have 100 basis points of leeway to re-stimulate the economy if things go pear-shaped. That's not a big buffer.
And that's something that Janet Yellen was pressed on during the news conference. Mike McKee, as we wrap up the Fed Decides, give us your final thoughts from the central bank.
Well, the interesting thing is we've got a policy path now, but how long does it last? We know they'll get to December, and if conditions don't change significantly, they'll raise rates one more time. But 2018 is going to see a whole new Fed. Janet Yellen said she hoped the president will start appointing people to the central bank.
Right.
And that will change the outlook. It may change the way they make policy. So there isn't a real long-term path that the markets can hang their hats on right now.
Michael McKee, you should always ask the last question at the press conference. That was killer, and you truly moved the gold market. Ira Jersey, quickly, a final thought.
Yeah, I think we need to wait for the Treasury Department. That's going to be the next thing that the rates market really cares about is how are they going to deal with the Fed runoff.